As an investor looking to buy properties, whether it's a flip, a new build, a rental property, how do you expect to compete against everybody else? Or if you have a full time job and you have other investors that have teams of people scouring for deals, how do you expect to compete against the competition in that sort of environment? And that's what we're going to discuss today is having a buy box for your properties in the Tampa Bay area. So if you're an investor, this may not be a totally new concept, but wanted to explain in a little bit more detail what we see in the marketplace and how somebody can be competitive even against these large teams or these large buying institutions for deals, right? Everybody wants a good deal. They talk about it, but what does that actually mean? So today we're going to dive into what a buy box is. We'll also share a little bit of our personal buy box and stuff that we look for. So just a couple things to think about is really all we're describing is the criteria that you're looking for. So we know investors that will buy properties sight unseen because they know the zip code really well. Maybe they only buy within a certain radius, a couple miles or a couple zip codes, or within a certain city. Maybe they only buy block houses, wood frame, maybe for only one story, not two story. Maybe not before 1978. All these details start to formulate what works for you as an investor. We want to talk through a little bit of this. So, as our personal investment strategy, this has been something that we've sort of just come with over time. I got to find a way to cut that out. We found a couple things that have been super helpful when looking for properties for ourselves. And it all starts with the areas that you actually want to invest in. So, a couple things that we'll walk through today obviously could be location driven. So, are you going to be buying in Tampa, St. Pete, Clearwater? Are you going to buy in all those areas? If you have contractors you're working with, what areas do they want to be in? So if you're buying a rental or a flip and you have a contractor that's going to have to be driving 30 minutes to an hour just to get to the property every day, that can drive up your overall cost. So I'm always a big fan of investing in your backyard if you can. So us personally, as for rentals right now, we like to be in the Tampa markets, close to the office, close to where we live. We have investors that like St. Pete or certain zip codes in St. Pete. So defining that certain areas or geographic is going to be the first place that you should start. Typically, some investors are okay with flood zones, some aren't, especially with the recent hurricanes and storms. There's a whole different thing that you have to consider for flood zones, longer days on market. Still, there's a buyer sort of scaredness around that because of what we dealt with recently. So we like to buy non-flood zone in Tampa. You could even look at school districts. It's not going to maybe matter as much on the rental side, but if you're doing a flip or new build and you're going to sell to an end consumer, that might be something that you're also going to look at. Days on market is super important on a flip. Won't matter as much on the rental side, obviously, but days on market. If you're flipping a property, you need to know if houses are selling within 30 days or 60 days, or if it's taking longer, right? Crime, income levels, different stuff that you guys are able to research within the marketplace just using public data is all going to help you drill down into a tighter and tighter buy box. Obviously, asset type. If you're a rental landlord, do you want houses? Do you only want 2 to 4 units? Are you looking for 5+ units? If you're flipping properties and you're doing houses, do you also want to do condos and townhomes? And if you are doing any of those, what price points? So a lot of investors like to flip single family houses after they've been repaired for less than 500 grand. Some might be 500 to a million and then a million plus, right? So all of those different price ranges also dictate the finishes. They sort of dictate different buyers' needs and wants. So you need to be very specific and start to think about what's different in those different buyer pools. So if you traditionally have done flips or rentals in a certain area and you're changing that, you may have to change your renovation style, your new build concepts, or from a rental property standpoint, the types of finishes you're going to have to put in your rental to get maximum rent could be different than other areas, obviously, right? So type of asset that you're interested in. A lot of times on the rental side, we don't really see a lot of investors look at townhouses and condos unless they already owned it for some reason and moved out. Most of the investors have houses, or a majority of them are more in the multifamily space, or as they grow, they might have a couple houses, and as they're sort of trading up or increasing their portfolio, going into a multi-unit property because you have more people in one location, right? Better sort of rental overall analysis and portfolio there. So that'd be type of construction. We talked about the age. So some people are like, hey, I'm cool flipping the 1925s, bungalow wood frame house. If you're a newer investor, there's a lot of unknowns with that compared to just buying something block or newer, right? After 1980 or after 2000s, much quicker renovations. That's something that we hear a lot of from investors right now. Quick in and out. That's what you want. With the higher interest rates, market's been a little bit soft. You really have to be careful if you're going to be doing $100,000 renovations or more. You should expect to spend more, obviously, on wood frame or older properties, and just expect that there's more pitfalls that you might run into that you didn't discover on the front end. So if you're a newer investor, go with the very cookie cutter, easy flips that you're looking at, where you're probably $50,000 or less, quick paint, quick cleanup. Maybe you're not doing the full remodel, you're just doing about halfway. Yeah, you're not going to sell it for as much, but you might sell it quicker and still net a better percentage at the end of the day. So, type of asset is going to be something that's really important for you guys to look at. Obviously, the strategy, right? So, your main strategy might be to flip, but we know a lot of investors, we see it right now, flips and new builds, where they may not get the value. The appraisal could come low. The days on market could be long, where they have to rent it out for at least a year. So you always, if you're flipping, always have a backup plan on knowing at least what the long-term rental market is. And even on the rental side, right? You're buying a property, pro forma's this, it might not be that. Rents are declining in some areas. We're seeing a lot of just price compression. So you may not be getting as much for rent, right? So just what's the plan B on the strategy? Same for new builds. If you're building it to sell as a new build, you may have to rent it out for a little bit as well. We talked about price ranges a little bit. So not only starting budget or purchase price, but renovation budgets. And then obviously how you plan to finance it. So investors that are the most competitive in the marketplace really have cash in hand or have private lenders or have hard money lenders that they've worked with for a long time where they're going to be able to close in 2 to 4 weeks, right? So you have to be able to compete against that. So having financing sort of in place up front, assuming that you're not going to wholesale it and just flip the contract, right? We talked about rehab levels a little bit. So are we going to go in and take everything down to the studs? Price per square foot is going to be really high. Are we going to do, hopefully maybe the 4 points are all good, your roof, electrical, AC, all that stuff's good, and we're going to do more cosmetic. Or it could be something simple where a property just looks really rough. We're going to clean up the landscaping. Maybe we paint the inside. Maybe we just put carpet down in a few spots and just do like a very minimal renovation just to flip it really quick. So how in depth are you willing to go on your renovations? Do you want foundation issues? Do you want to if you're flipping, are you going to do additions where you really have to go through, extra drawings and permitting and timelines, that sort of stuff? How much are you willing to invest in time wise for the return that you're looking for? So if you're doing a quick flip, maybe you can get it out in, 4 months, where if you're doing a big addition and renovation, maybe it's, 6 months, depending on days on market after you renovate and you need to sell. So now more than ever, we're seeing projects go longer from investors that we talk with, for our own stuff that we've experienced, whether it's just, can always be contractor delays, could be the permitting office just taking forever. You always just need to factor a little bit longer than what you're planning for hold periods for this stuff. And that brings us to another thing, right? Holding costs. So obviously you have real estate taxes, you can have utilities, if you're in flood zones, insurance, all this stuff, the monthly debt payments, if you're using hard money, all that stuff's going to add up, right? So that might also dictate your buy box, is how hard it is to get financing for stuff that you're looking to buy, or if just a certain area has different nuances that you need to know about, where the holding periods could be a little bit different based on what's going on in the marketplace. That can impact your finances, which in turn affects your sort of end cash flow that you're looking for when you sell the property, or your net income on the property as well. So geographically, years of the property, wood frame block, beds, bath. Maybe there's a minimum bed, bath square footage that you want. So if you're flipping, maybe you don't want to buy anything that's less than a 3.2 and 1,300 square feet. You may plan to add bedrooms or baths, but maybe you don't want to start with a really small footprint. Same thing for rentals, right? You see a lot of turnover because of small size of studios and one beds. So maybe as an investor, if you're looking for at least a duplex, maybe you're like, hey, I don't want any duplexes that are smaller than a 2-1 on each side. I don't want to deal with any 2-story properties right now, just 1 story, built after, 1978, where it's more likely that there's been updates to the plumbing and stuff like that as well. That sort of thing. So it's not overly complicated to build your buy box, but being very clear up front tells your realtor, if you're using a realtor, tells them what you're looking for, where you're looking for, so they can make offers quickly for you. If you're working with wholesalers, it gives them a really clear idea of what to look for. If they're sending you deals and you're underwriting and you have an assistant on your team that's getting the first look at the deals to see if it's even worth exploring, they have a very clear checklist on what they need to be looking for. We've also seen other investors that buy too much or have too much going on, and they decide to sell off some of their properties to other investors. So they're maybe they maybe didn't go as a wholesaler, but they bought the property to flip it, and they just don't have the time or capacity, and they flip it to another investor. So a lot of people that you could be networking with, a lot of local investor meetup groups that you could be going to. That's a lot of just interactions that we make with other investors to see what's going on, and then different areas. So lastly here, just kind of buy box for us is, we've been in certain part of Tampa doing rentals. We kind of buy within like a 20-minute 15, 20-minute radius, East Tampa, West Tampa, Ybor, Tampa Heights, this sort of area where we know it really well. Me and some partners have lived in the area. We know it really well. We can underwrite it, in a couple minutes. So a lot of these deals, if they're really good deals, especially from other investors, they're going to be gone in a day or two where you don't have the same inspection periods. You can check out our other video, how to work with wholesalers. It's a whole different ball game. If you haven't understood how to buy properties from wholesalers, very different from buying on the MLS through realtors where you have due diligence periods and all this stuff. So all that stuff would dictate your buying strategy, but we can make very efficient decisions and move quickly on properties because we're very narrow, very specific on where we want to buy, what we want to buy. So hopefully this was helpful. This is how the really successful investors are making it and grabbing the deals that you never see. Thanks for watching.